Arbor Realty Trust is a company that I cover really frequently on this channel, and for good reason. I'm not only a shareholder of their stock, but it's one of only a couple of mortgage REITs that I've had that's been a great investment over the past decade. And over the past 2 years, I've covered all of the biggest accusations and short reports attacking them, which as I predicted were all nonsense. I recently also talked about what happened back in July when it was discovered the DOJ was probing the company for their lending practices and loan book. So far, it's still an ongoing investigation and nothing new has been announced. But as I also suspect, this is likely not going to result in a serious issue for the company either, as a number of these companies in the lending sector are also being investigated. It's more like a publicity stunt and a safety precaution on their part after they really dropped the ball during the financial crisis in '08. The share price of ABR has actually fully recovered since the DOJ announcement, even though it's still an ongoing investigation. But while all these things have been going on, and I've been remaining optimistic about Arbor Realty, there's also been a growing concern for them that's posing a threat to their stock's dividend. According to the company's most recent earnings, which were released back on August 2nd, they announced GAAP net income of 25 cents and distributable earnings of 45 cents per diluted common share. They also declared a cash dividend on their common stock for 43 cents per share in that same announcement. This currently gives their stock a dividend payout ratio of 95.5%. Although a payout ratio of above 90% isn't entirely rare at all for mortgage REITs, such as Annaly Capital or Two Harbors Investment Corp., having a payout ratio this close to 100% is very unusual for Arbor Realty. For many years, this company touted having the lowest payout ratio among their peers in the mortgage REIT sector. If we look at one of their investor presentations from 2 years ago, we can see that in September of 2022, they had a payout ratio of just 75%. This was a much wider margin of safety compared to what we're seeing in their most recent quarter. And as time has gone on over this last year, their dividend coverage has slowly been shrinking. This 95.5% payout ratio is from their most recent quarter, but if we go back another previous quarter, in the month of March of this year, we can see that they reported 47 cents in distributable earnings. This was a payout ratio of 91.4%. In the quarter before that, they reported earnings available for distribution of 55 cents. That was a payout ratio of 78.8%. So you can see here that as time has gone on, there's been a concerning trend where the payout ratio is coming very close to 100%. Considering the direction Arbor Realty has been headed over the past few quarters, the possibility of an upcoming dividend cut is growing. The downward fall of their payout ratio is definitely a concern for investors. But despite the bad news, there's also been some reasons over these past couple months to be more optimistic about this company as well. First, all of us know that interest rates were recently cut by 50 basis points. This should provide better operating environments for the companies that are doing business with Arbor Realty that have loans in non-accrual status. These lower interest rates should also increase the demand for their services among bigger and safer borrowers that this company can lend to. It's been pointed out that a lot of what Arbor Realty provides is fixed debt, so borrowers that are struggling won't necessarily have a smaller bill to pay Arbor Realty, but the environment itself for these companies will become easier for them. Companies save money when interest rates fall, so it will provide some relief. Second, listening to their latest earnings call provided some reassuring news. First, CEO Ivan Kaufman stated, "Most of our peers have cut their dividends substantially, have experienced significant book value erosion, and have generated a negative total shareholder return over the last 5 years." This is a true statement. If we look at their book value per share over the past few quarters, it has remained very stable. This company has had some of the best book value growth among their peers in the MREIT sector, and a lot of mortgage REITs have been cutting their dividends this year too. Another quote that stood out to me was when Kaufman said the following, "As we have communicated, we expected the first 2 quarters of this year to be the most challenging part of the cycle. This is a good sign of confidence going forward." Kaufman appears to be indicating that the first 2 quarters of this year, which have already been reported, would be the most difficult for them. If he is right, then the next quarter should be better for them. Third, I think it's still worth reminding people that these attacks over the past couple years, including those by Viceroy and Ninja Research, continue to be proven false. All of these short reports claim that Arbor would completely collapse under their poor investment portfolio. And although times are getting tougher, it still hasn't resulted in the collapse of this company. If there was a time for this company to completely buckle, it would likely be right now, or even earlier than now, given how rates have been cut. But Arbor isn't the company that it was back in 2008. They transformed themselves after the financial crisis to ensure that they wouldn't repeat history. Fourth, and likely one of the best signs of recent optimism for this company, is what insiders have been doing. In my last ABR video I did back in July, I said that I would be monitoring to see if the company executives would be trading ABR shares in light of the DOJ announcement. As it turns out, they have. On September 4th, 2 months after the DOJ announcement and 1 month after their most recent quarterly results, two Arbor insiders placed trades on their stock. Company directors William Green and David Freeman both bought more shares of their company's stock, according to sectionform4.com. David Freeman bought $23,229 worth of ABR stock, and William Green bought $140,693 worth of ABR stock. Especially for Green, this is a huge purchase and a good sign of optimism. The board of directors know their company better than any investor or Wall Street analyst. This quote at the top of the page by Peter Lynch is pretty significant in my opinion. Insiders might sell their shares for any number of reasons, but they buy them for only one: they think the price will rise. If Arbor was convinced their company was going to fall or even suffer for a long period of time from the DOJ finding fraud, it wouldn't make sense for insiders to buy more shares using their own money. If you study corporate scandals like Enron, insiders start dumping their shares during bad times and scandals. You can't 100% guarantee ABR won't suffer a dividend cut or something along those lines. I guess these two guys could be morons, but if insiders keep using their own money to buy more shares, they must be feeling really good about the future of their company. But let's go ahead and assume the worst, or at least what I think is a worst case scenario. As I've said, I don't believe ABR is worth $0, but a dividend cut I think is still a possibility. If there is a dividend cut, would that be a good reason to sell Arbor Realty? I would suggest that even if there was a dividend cut, that investors shouldn't just run away from this company. If we pull up their dividend history, you can see that there was consistent growth following the financial crisis up until 2023. This is a company that knows how to grow, unlike most mortgage REITs. They have a great management team that has done well in growing their business over time. So even if ABR were to announce a slight dividend cut, I don't plan on selling my shares of this company. If they survive the financial crisis, they can survive what they're going through right now. They know how to grow their business and their dividend. Kaufman sounded confident that the worst is behind them, but I'll have to see it to believe it next quarter. They did discuss the safety of their dividend on their earnings call, but as usual on this topic on earnings calls, they didn't really go too in-depth. Their CFO said that in the last 2 quarters, things will likely remain tight for this company, but they're confident in the long term with what their investments are yielding to cover it. That's not really too insightful, but it shows that they want to keep their dividend where it's at. So in the end, with conditions getting more difficult for Arbor Realty, there's still reasons to remain optimistic in the long run. Interest rate cuts, insiders buying, incorrect short reports, and hopefully a better environment should be on the way for this company. If we do see a minor dividend cut, I don't plan on selling because they've done really well at growing their dividend over the past few years. They were growing their dividends at least twice a year for almost a decade until 2023. I think the only thing that could cause me to sell my shares of ABR is if the DOJ does find some huge corporate scandal going on, but I still believe that's very unlikely. So with that being said, that's going to conclude today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.